Welcome everyone, Empire Crypto TV. Be sure to subscribe to our channel for more content. Empire Crypto TV. Please be sure to like or watch our shows, tutorials about trading, especially for beginners. Empire Crypto TV provides a whole lot of content. Go to our channel and you can see a whole lot of videos regarding trading tutorials, mostly focused on beginners. Today we're talking about Fibonacci retracements. Okay, Fibonacci retracement is an overall, or should I say, is a price correction for an overall uptrend or downtrend. Price correction, overall uptrend or downtrend. These are very, very, very powerful strategies that are used by traders from the highest level to the lowest level. It is very, very, very important if you are a trader that you should familiarize yourself with Fibonacci retracement numbers and how to use it and how to measure it on the market. But first, let us look into the definition. It's a number theory. Fibonacci, I think, is an Italian man, of course, is also attached to an Italian mathematician. Okay, the Fibonacci number sequence is 1 plus 1. Okay, you'll have this 1, 2, 3, these numbers right here. But what usually happens is you say 1 plus 1 is equals to 2, 1 plus 2 is equals to 3, 2 plus 3 is equals to 5, 5 plus 3 is equals to 8, 5 plus 8 is equals to 13, and so on. That's how the basic way of Fibonacci sequence works. Is constructed by adding the first two numbers, as I explained to you, to arrive at the third. The ratio of any number to the next larger number is 62%. These are very key points when you are trading, but we'll discuss them further. 62%, which is a popular Fibonacci retracement number. The inverse of 62%, which is 38%, is also used as a Fibonacci retracement number. May I add to that also 50%, which is also used for retracements. Very important numbers. I take three of them: 62%, 50%, plus this 38% for me. And one of the ways that Fibonacci numbers are used are also on the famous Elliott wave theory. It's a trend pattern, or is a market pattern, or a common pattern that is used or can be traced on the market charts or candlesticks. Sort of have to use your trend lines in order to have this perfect pattern. I'm going to it right now. It's the Elliott wave theory. This is one of the ways that you can use your Fibonacci so that you can be able to measure if the market is gonna have an overall uptrend or an overall downtrend. Fibonacci works both for uptrend and downtrend, for bulls and for the bears. So this is an overall uptrend, and this is a price correction right here. Usually they call them price corrections, where the prices sort of like go down. This is where the take profits, all the bulls take profit, and the prices sort of like retrace just a little bit. Hence they call it retracement. When it retraces, here you need to measure it with those 62%, 38%, or 50%. If it retraces on one of those Fibonacci retracement numbers. Let's look into it. When you're looking at the chart, it might be different. It comes different ways. It might be not an Elliott wave theory, but one of the most famous ways of using Fibonacci retracement is through the Elliott wave theory. But other than that, let us look at the real case scenario when using Fibonacci retracement number. Okay, I just want to go to it. Right, I have a case scenario here where is US dollar CAD pairs. Okay, let us just look into it. I have placed one Fibonacci retracement number, but these kind of strategies, you need to practice them in order for you to perfect them, so that you can be able to take advantage on the market when the opportunity arises. Now, first things first, before I go and explain what's on the chart, when you pick up this Fibonacci, this is trading view, you come here and then it says Fib retracement. You click on that small arrow and then you'll see here Fib retracement. There are a variety of Fibonacci that you can, there's Fib time zone, there's Gann number, there is a trend-based Fib time, there is pitch fan, there is Fib speed, resistance, and arcs. There's a whole lot of them, but be sure to take Fibonacci retracement. It might be not the first one on your trading view, but be sure that you take this one for the basic sakes, okay, for the sake of just doing things from the beginning, just trying to understand how the tool works, in fact. Okay, you take retracement, and then obviously when you plot it, what you do is it will have numbers on them. So be sure that you take your zero if it's a bullish retracement that you are measuring or you are working with. If it's a bullish retracement, you first take your zero below. Your zero must come below, and your one must, no, sorry, your one must be here below. Okay, you're gonna have your one, okay, not zero. You're gonna have your one here, and then you're gonna have your zero up there. Okay, that is for the bullish or the uptrend retracement, if you want to look. But for a bearish, you have your one up there, then you're going to have your zero below. Then you're going to take that Fibonacci and then you stretch it right through from the bottom, from the angle. You have to work with this angle. If you're working with this angle, you're going to just take it from the bottom up to the highest level of the candlesticks that you have on the given screen. Okay, if like I should change my screen maybe to this, then my latest high, if it's higher than this, then my latest bottom maybe, for example, would be here. But now the lowest level is right here, but we're going to work with this level. Okay, so how does this work? This is a short-term correction on a overall uptrend or downtrend. Here in this case, Fibonacci retracement has worked tremendously on this chart, particularly. As you can see here, there is my 618. This is the most important retracement numbers, alongside with this 0.5 and 0.382 retracement number. It also speaks to that 68% and 38% that we've spoken about. This is also applicable to your stock or also your cryptocurrency trading. Be sure to remember that. Also on Forex, but right now I'm looking at the Forex pairs US dollar CAD. And also remember that you place it here. When you start with your 1 and your 0 being up there. Make sure that you cover the whole space, because you have to take it from the most bottom candlesticks and then go take it up to the highest level of the candlestick. Now, how did this work? Here, these are the three most important retracement numbers: 0.382 and 0.5 and 0.618. The rest of the other retracement are Fibonacci extensions. For now, if you are a beginner, please be sure to focus on these three retracement numbers. Right here, you can see the market has retraced at this point. It was an overall uptrend where buyers come in, they form this uptrend. The same people who come here, they're gonna take profit at this point here. As you see that retracement, same thing that we saw on the Elliott wave theory. It happens in different ways, but here it happened on another chart, but it's not the Elliott wave theory, but it's another way of looking at it, but also learning from the Elliott wave theory, because you can see here all the bulls or people who were buying or supporting that uptrend took profit here, and then the market sort of retraced. And when it retraced, how far will it go? It could have went all the way down. And if it does not retrace on either three of the Fibonacci retracement, especially the last one, which means the market is likely to continue going downtrend. So you do not have to place an up or a buy, for instance, so that you can be able to earn profits. But if it breaks down here and it continues going down, which means the market is not going to go on an uptrend direction. Probably it will just stagger down all the way down. But here on this case, it retraced on that 618, and then it continued up, and then it retraced again when the bulls or the buyers took profit on this point, and then the market sort of fell a little bit, but it took a long time for it to regain that strength going up again. But it did retrace, going up and down. That is why it is important that you gain experience and practice when you're using some of these tools, so that you can be able to understand them fully, because the trends may be different from this one that I'm showing you. So you need to try out different trends and try to use these retracement numbers, the 3 basic retracement numbers. If it retraces, see if it continues going on an uptrend or a downtrend. This also entails for a downtrend as well, but I might show you on a bullish trend, but also the downtrend Fibonacci is also applicable at this point in time. So here, right here, it retraced on 0.382, which is also an important Fibonacci number. Had it not retraced and went down and then cut through 0.5 and cut through 618, which means this uptrend would have shown the signal that it has exhausted, or it has been, the uptrend has reached an exhaustion level, and that means the market will continue or start going on a bearish trend or in a downtrend. But here in this case, it continued going up and going up until this point. So you can imagine if you would caught the market here on this point when the buyers were creating this trend, this long candlestick, and then you saw, okay, the buyers or people who came in earlier on sort of took profit, and the market sort of retraced a little bit or regressed, and then at the same time they came back and stepped in. The same people who created this trend, they are coming in again, and they open another buy order so that they can start pushing the market going up all the way. And then they also took profit here, and then they started buying again, and then it pushed. Imagine if you would have caught it here, it would have been profit all the way up until that point. It would have been lots of money in the bag if you would have caught it in time and being able to use it in the most accurate way. I hope you understood that. Thank you very much for watching the show. Empire Crypto TV, be sure to subscribe, like the show, and look out for more of our videos on tutorials on trading, whether it be Forex, crypto, or stocks. These techniques do apply. Until next time, thank you.